conflict involving Iran fuels uncertainty overseas, and Americans are feeling it right here at home. We're talking about from the stock market to the cost of living. So joining us now, we have financial expert Neal Brown with what investors and families should know right now and what not to do in a panic. Because, Neal, we can't be panicking when it comes to our money right now, right?
No, panic is not a plan.
Yeah.
It is definitely not a plan to do.
Yeah. So let's go ahead and talk about when it's something like this, as far as a conflict dominating the headlines right now. What's the typical market reaction when it comes to something like this?
Typically, it's hard to determine, but typically the markets move very quickly. A lot of reaction in there. So it could be violent up, it could be violent down, depending upon what the news cycle says at that particular time.
So should we keep in mind, what should we keep in mind before we make any sort of money moves during this time?
Good question. I think the main thing to think about is, while what we might be seeing is short-term, we've got to think about a long-term perspective to our financial planning versus a short-term perspective to our investment planning.
So what does that look like? So if we have like that long-term investment and changes, should we be making those major changes now for the long term?
No, not now. Typically, your long-term items are going to be more of a plan, whereas right now you don't want to react. Panic is not a plan.
Okay. What does that look like? What are those long-term things that we should be keeping on the back burner for us?
As we always discuss, thinking about your emergency reserves, thinking about proper asset allocation. So when something like this does come about, you've got a portfolio that you can stomach the risk, because you got to stay in it for the long term to make money. And if you're panicking and selling at the bottom and then trying to buy when it's going well again, that's the opposite of what you should be doing.
Okay. And so, because that's basically panic buying and panic
Absolutely.
selling. Okay. So what are some of the right questions that somebody should be asking before they touch any money or move anything around? What are some of the right questions or right things that they should be thinking about?
The biggest one is time frame. So what's going on right now, while it may be a terrible situation from just a conflict situation, from a financial situation, you probably will look back on this in 20 years and not even remember it. Things like this happen all the time, and the geopolitical crisis or risk are always out there, but you just got to react to them properly. And usually the best plan is not to do anything.
I was going to say, what are some of the mistakes that people do? Is it just because they act so quickly?
Yes, they let emotions get into it. They should have some type of portfolio that they know is going to go down. And if their break point is 15% down, they should build a portfolio that they can stomach while it goes down 15%. If it's more than that, you just got to look at your own internal risk profile.
One thing that I also noticed is we're seeing gold prices and also gold mining stocks jumping. Does that often happen with stuff like this as well?
It does. Gold is a hedge against inflation. It's a hedge against political uncertainty in the world. So you typically will see that. Now, the thing about gold is you got to think about long term again. Over a short time period, gold typically does pretty much nothing, and it's going to react in a violent up and down. Over a long time period, it's kind of flat. It's just the violent reactions up and down that make it average out to market returns.
So I was going to ask, so then how are we supposed to be looking at gold as far as like a smart portfolio?
Usually when people are thinking about a commodity as a hedge, shouldn't be doing more than 5, maybe 10%, but 10% in my opinion is a little high. So a lot of times people think that they should be hedging, buying gold, buying silver. But from a true financial planning standpoint, if you're only buying what you should be buying, it's really not enough to make a true hedge.
Okay. So that was a question there too, is if somebody's thinking, oh, should I sell right now? Should I sell right now? It's really in that whole kind of time frame of don't panic, because you have to think of the long term.
Correct. If you're trying to sell right now, you probably shouldn't have been invested to begin with.
That's true. Okay. Let's go ahead and talk about beyond the fuel costs. I know we've been always talking about gas prices, but if fuel costs could rise, how could that ripple then into like airfare, shipping, and then prices that we pay for everyday items?
Yeah, I think you hit it right on the head with all of those. Just driving over here today, I noticed fuel was up 50, 60 cents a gallon on my drive over. And if you think about it, if this is a short-term conflict and it doesn't ripple through, we'll be okay. If it does last and you do see those fuel costs go up, diesel trucks are very important to get everything from farm to table. Airfare to get UPS and FedEx moving, to get all your goods shipped around, your Amazon packages, your Walmart packages. All of these things are going to go up in price.
Yeah, no, and a lot of families too, as we're nearing towards spring break, let's just say you've got a tight budget, you're already on there too. What are the first pressure points that they might notice?
I think you're going to see it in fuel. You're going to see it in what it costs you to get to your location, whether you're driving. Maybe you're going to see it in higher airfares. Now, on the hindsight, on the other side of it, you might see lower hotel costs because they're trying to stoke demand a little bit. If they're seeing less people traveling, you might see some deals on the hotel side to offset some of the fuel cost.
Okay, so it could be a positive and a negative.
It could be.
Really in that way too. So people sometimes hear seeking safety and then think, you have to get out of the market immediately. But you argue the real safety is, of course, preparation. So what should households prioritize right now?
I think when you look at it that way, you should always have a bucket of cash, a bucket of midterm portfolio, and a bucket of long-term. So your short-term should be there for when you have these market gyrations right now. If you're 100% invested in stocks and you're thinking, oh my goodness, this is horrible, I need to be making some changes, you probably should have been bucketed approach from the beginning.
As we wrap up this chat, what is the biggest takeaway on a financial aspect that we can take with this war? What is going to impacting us? Basically, what should our viewers need to know as far as working with our money with all this time?
I think if it's long term, you could see some costs going up. You could see some ripples coming through on price of eggs or price of milk getting from farm to table. I think if it's not, and even if it is somewhat long term, think about in 20 years. What was going on 20 years ago in the stock market? I have no idea, and this is what I do for a living. In the long scheme of things, it really is just a blip, even though it seems very important and very upsetting right now.
Okay, so I like that idea. So just making sure that you're not making any rational changes right now. Maybe just take the time, and also really good idea is just to talk to a financial advisor, right? Yeah, taking that opportunity and going do that. Neal, thank you so much for being here. We appreciate you. Now, we talked about a lot about investing your money and what you should and should not do during this uncertain time overseas. So don't worry, we're going to be putting all of this on our website at WLTX.com.